A lot of discussion going around from C-suite leaders on the state of the economy, especially after the banking stresses in March. Let's listen to what executives have said so far this week.
The last decade, we have been living on abnormally low interest rates and probably broader credit availability than has been historical norms. And when that happens, invariably, you see the repercussions in things like Silicon Valley Bank.
So we're not seeing a lot of trade down. We're seeing, if anything, more careful usage of the product that I have bought. But generally, again, just look at the numbers. The consumer is holding up extremely well.
We don't see the activity on the consumer side slowing at a pace that would indicate that, but we see commercial customers are being more careful and things like that. But everything points to a relatively mild recession.
People need to be prepared for the potential of higher rates for longer. If and when that happens, it will address problems in the economy.
I like that. It will undress problems in the economy. It will reveal problems in the economy. So I think the takeaway, and this was the subject of the morning brief, the takeaway is that while if you look at the surface of the economy, those banking stresses seem to have abated. But what some of these CEOs, particularly the financial industry CEOs, are saying is you're still seeing it sort of percolate through and have some effects. And that's something that people still need to keep an eye on.
Right. And they have a lot of incentive to make sure that there's still a ton of confidence in the banking system as a whole. But of course, at the same time, we have to think about the fact that many of them also are so large that they've been able to kind of abate the larger risk that a lot of regional banks have incurred over that time. And so for the larger banks that we have heard from, it's been amazing to hear and good to hear that they are dealing with consumers or seeing consumers be more resilient and saying that things are still pretty good right now. But at the same time, moving forward from here, I think now it's a matter of where are they continuing to shore up confidence in this rising rate environment for so many of the products and the financial lending capabilities that those financial conditions are not worsening so much so that it would be detrimental to the relationship that they have with a lot of the consumers that come to them either for a bank loan or just to get that house or even, just an auto loan at the end of the day, too.